Welcome to another edition of BCL interviews. Joining us today is Mr. Nandan Venkatachalam, who works with Axelor Ventures. Nandan focuses on enterprise tech investing and has previously worked with Mosaic Capital, an investment firm based out of Europe, where he specialized in fundraising across the technology, healthcare, and industrial sectors. Thank you, Nandan, for taking the time out of your day to speak with us. We really do appreciate it.
Thanks, Sandeep. Pleasure to be here.
So if you're ready, we can begin with the question.
Sure, we can.
So the first thing I wanted to ask you, Nandan, is basically about what the trends look like in the startup world today. Basically, I guess over the last 6 months to a year, could you tell us a little bit about the sectors which have been gaining some prominence?
Sure, Sandeep. So I think we're probably among in a phase where I think it's probably the best time to be an entrepreneur or startup, so to speak. The market is flush with liquidity, a lot of rounds happening. And more importantly, you're seeing quality getting funded right this time around. So regardless of what you're building, as long as you have a vision, you're going after a large market, there's a high likelihood that you are going to get funded. And there is a lot of things that you can do with that funding right now, and obviously going forward as well, and expand your horizons, markets, etc. So that's kind of the theme we're entering this conversation with. It's a good time in the markets as well. It's a good time to get out for fundraising, so to speak, from an entrepreneurial perspective, because Zomato is obviously going IPO. It's going to create a lot of millionaires, multimillionaires. So the angel capacity is also going to come back into the ecosystem. At the same time, you're seeing a lot of late stage rounds happening, unicorns being created. So the early stage market is flush with liquidity right now. So having said that, obviously there are evergreen sectors. There are sectors which have picked up trend over the last year and a half, and obviously sectors which have been hot in the past and will, kind of paused in between and again have started to gain traction and momentum, right? We're largely seeing two opportunities playing out in India, right? One is on the overall overseas spaces, which is effectively companies building out of India for global markets, which is a core theme that we at Axelor have also been going after, right? So these companies include the likes of your technology enterprise SaaS companies, which are effectively looking to build at a low cost and sell in overseas markets, at a higher cost, taking advantage of the talent base out here in India and also the arbitrage in terms of costs, etc. Right? That is one. Second, companies going after the Indian market. Obviously, there's been the whole macro sentiment around geo, the rise in number of internet users, increasing purchasing power within the Indian population. And it's not just tier one, right? You're seeing tier two and three, the entire aspirations of those people are rising as well. So which is kind of giving birth to a new economy, so to speak, and a next set of a few 100 million users that, companies would like to definitely go after. So companies going after that. So you typically look at your consumer tech companies, you look at your ed tech companies, all these companies which are targeting, the next wave of consumers, the next wave of students, content consumers, shoppers, online shoppers, all those things put together. So that's more of a domestic opportunity. The third being a bit of a hybrid, which is what we're seeing in areas like supply chain, digitization, etc., because these tend to be old age industries where there's been no form of digitization whatsoever, right? Normally, everything happens on pen, paper. At best, they've migrated to WhatsApp. How do you digitize all of this? How do you bring a layer of formalcy to all these sectors, right? So that's where the entire supply chain opportunity lies, which is digitizing supply chains, digitizing an entire layer which has not been touched from a digitization perspective earlier. There could be a cross-border piece to this as well. For example, you look at segments like imports, exports, right? You have companies or supply chain B2B marketplaces exporting outside India. You have companies looking specifically at imports because you're seeing a lot of foreign companies looking to enter India, especially on the brand side of things. So this is kind of a hybrid opportunity over here. So combination of supply chain digitization, B2B commerce, those tend to be some of the new areas which has seen a lot of activity over the last year and a half, so to speak. So these are some of the themes that we've also started identifying and going after at Axelor. Obviously, there have been some COVID-induced themes as well. So, for example, on the gaming side, we saw a lot of action happening in the last year and a half, especially on the back of people being bored at home, sitting in lockdowns, etc. The ed tech thing saw huge wave because of students staying at home and wanting to learn new things in their free time or downtime. And then obviously you saw other segments on the enterprise side. For example, how do you replicate water cooler conversations? So you've had a new suite of enterprise tech tools or SaaS tools coming up to replicate those kind of scenarios as well. So some of them are COVID induced, but a lot of them, we could say it was high time that we saw those kind of models playing out in India.
Okay, fair enough. Next, I wanted to ask you about what investors are looking for in companies today. What is important to them in terms of is profitability gaining prominence, are break-even points becoming shorter? How does a startup pitch to an investor in this day and age?
Yep. So obviously, we as a country have seen two waves to this. One was obviously the entire 2013, 14 kind of wave where we saw a lot of capital being infused into India, a lot of high cash burn models, which were popular at the time, so to speak, right? And then there was a lull in between, and things have picked up again over the last year and a half to 2 years. Growth stage rounds, early stage rounds, all that coming together. I think the drastic change that we've seen, or probably through COVID as well, because one of the first things that companies had to do during COVID was to figure ways to cut costs, right? Because obviously revenues were taking a hit. No one knew what it was going to be like entering the entire COVID and lockdown scenario. So a lot of cost cutting measures have had to happen. Thanks to that, the entire sustainability piece of the DNA of founders has changed slightly. So I won't say we're looking at profitable companies here. We're definitely looking at companies which are trying to optimize on cash burn. We're starting to see metrics which are on the CAC side, LTV side, etc., starting to be monitored. Even at seed stage, which was typically never the case, or it was very rarely the case, right? We're starting to see more sustainable models being built out, and largely seeing companies which are thinking of the long run, right? Rather than the next 12 months of growth or 15 months of growth, trying to build out a larger vision in terms of how they would like to be, perhaps as a market leader or joint market leader in the next 4 to 5 years. So that has changed. So obviously, most sustainable companies, even within our portfolio, we're seeing cases where profitability, or at least unit economic profitability, is being brought into the spotlight. We've been closely monitoring that as well. So whole set of resilient metrics is what we call it, but that's exactly what's been brought into the equation, right? So that takes care of the question on profitability or what kind of companies we're seeing. But what it effectively takes for a founder to raise funds is two things. At least from our side, we operate at an early stage, so it fundamentally hinges on two things, right? How good is the founding team, right? So we're seeing more and more second time entrepreneurs coming in. Recently, I think over the last 12 months, most of the investments we've done, at least 60-70% of them have been serial entrepreneurs who built out large categories for either large tech companies, or they've run startups themselves. So we're seeing a new breed of entrepreneurs coming in who've been there, done it firsthand, right? So it's kind of not an unknown or going into the dark for most of them. So founding team plays a critical role. I would probably say about 60% of the early stage fundraise or seed stage fundraise falls on that specific aspect. How good is the founding team? Are they able to talk numbers? Are they able to figure out what their GTM is going to be? It can be that your revenue traction is near zero, but as long as you have a specific and sustainable path to get to where you want to, I think you tick most of the boxes from that perspective. So founding team, their networks come into the question. How are they able to hire? Are they able to hire the best possible talent out there? All of these are soft checks that we do before really committing to a specific company, and the way the conversation comes out with these entrepreneurs as well. It's just more of a confidence building exercise for most of us. The second thing is the opportunity size itself. Are you going after a large opportunity? Are you going after something where the market is expanding, right? It's one thing to be a number 4 or a number 5 player or a top 10 player in a market that's maybe $150 billion, right? You'd rather do that than be a number 1 player in a market which is maybe sub $1 billion, for example, right? Because your addressable market kind of shrinks over there. So that's definitely something that we're going after. To see what is a current opportunity size of the target opportunity, but also driven by macros, will that kind of expand over time, right? So that's something that we're closely paying attention to. Post is obviously a lot of minor things come into the picture. How does the competition look like? How are you looking to build out this business? Are you looking at a market which is already saturated? How's your competition looking like? All those things come into the picture. But the top two, I would definitely say, is the team and the market opportunity that we're going after. Rest of it is optics or metrics, at least the stage in which we invest in, which is pre-seed and seed. Obviously, later stage investors, Series A, B, different kind of questions come in with regard to how the company's grown, wallet shares, all of which we input into our companies once they get into the portfolio. But in going into a specific company, we don't typically tend to look at all of these.
Okay, fair enough. Next, I wanted to ask you about the various stakeholders in the ecosystems. You're talking about investors, banks, and government organizations. From the point of view of the founders of these startups, what are their expectations of these various players in the ecosystem?
Right. I think it's fairly simple. All of them help in whichever way they can, right? So obviously investors come in with the capital, they come in with their network, but predominantly valued for their capital, right? We can make all the noise about founder friendly, helping founders build, etc. But eventually it's the founders' call on how they want to run the business. So for us specifically, we don't like to interfere too much into what the founders are doing from a business perspective. Yes, we are there to brainstorm. We're there to be a whiteboard or a sounding board in terms of how you want to explore new opportunities. But eventually, we're not going to get in the way of running the business or taking your decision. So that's the expectation from the investor side. Obviously, the network helps at all costs. Customer networks, hiring networks, investor fundraise networks, even smaller aspects like can you find a reliable finance partner, CS, CAs, all that within the network. And that's another aspect that we've seen building out, especially at a fund like ours at Axelor, right? Our portfolio is currently going to touch about 50, but we work with a network of over 250 odd founders through the course of the previous programs that we've run, etc. So one big community effect is one big thing that is definitely playing out for us, right? We as a team don't need to interfere necessarily, but you have founders helping each other out, acting as sounding boards, and in most cases each of them becoming their first customers, so to speak, right? So that's another value add that they expect from the investors, saying that how large is your community? Is it a community that's definitely going to help you out? So community as a whole is definitely picking up as an important piece. There are other large stakeholders in the ecosystem. Obviously customers play a big role as well. You're seeing a large shift of legacy companies essentially starting to warm up to and adopt startups, so to speak, right? Because historically that was never the case. It was always reluctance to not go after startups or work with startups. So that is changing, and that's a big help to the ecosystem because they're effectively the number one growth levers in the ecosystem, right? Without customers, nothing's ever going to matter, right? Government regulatory, it does play a huge role, especially on compliances, especially on things like rules around CA, CS. Truth be told, founders want to spend as less time as possible on all these matters, right? So the further you simplify all of this, the better it becomes, right? For example, a firm like BCL, I think the core aim has been that you'll work with founders to simplify their lives on the accounting, taxation, all those side of things. So the regulators play a role as well. So the fewer times rules are changed, the better it is for the ecosystem. And obviously, the public markets, etc., are starting to warm up to these kind of concepts, as evidenced by the Zomato IPO. So regulators have played a huge role in that. Then there's the rest of the ecosystem. You have headhunters, you have people who help in hiring. I think that's the single biggest pain point that we're seeing for startups today, right? The lack of talent, or the competition for talent, so to speak. So can you have talent agencies which can specifically help you build those kind of capabilities out, right? Then come the other players in the ecosystem. There are investment bankers, there are people on the accounting audit side, all aiming to ensure that the startup's life is as easy as possible. That's the core goal. So there's a popular saying, right, that it takes a village to raise a child. It's kind of the same way in the startup ecosystem, and all of us are interdependent on each other. Without startups, most of the investors wouldn't be around. Without investors, it's likely that some of the startups wouldn't be around, right, so to speak. And obviously there's the entire economy building around that as well. you have things spilling into blue collar workers, you have gig workers, your Swiggy, Zomato riders, millions of employment opportunities being created on an everyday basis as well. So it's all interdependent on each other. There's no emphasis on one being more important than the other, but obviously the founders come into the middle of all of this. So it's important that they are placed at a higher priority than most other players in the ecosystem.
I see. Okay. Just one last question I wanted to ask you about a bit about the future. The next 3 or 4 years, what areas do you think will gain traction? We're looking at blockchain and crypto and these sort of things are sort of popping up more. What's your analysis sort of going forward or looking forward?
Yeah. So I think I'll kind of go back to my first question or the first answer, right? That we're entering with such heavy momentum or such a high tailwind of a lot of ecosystem activities that are happening around us, right? So lots of millionaires, multimillionaires being created. That capital is going to come back into the system. We're seeing a lot of new funds being launched. So kind of abundant capital, so to speak, for startups, right? And I do believe that this is kind of the first time that we're seeing a scenario where um, there's competition for startups, but startups also have the freedom or ability to choose which investors they want to work with, right? Because there's so much capital available in the ecosystem. So we're on the back of such tailwinds. So the ecosystem is only going to grow from strength to strength. Obviously, there are a few things that can be improved around, say, ease of doing business. The IPO situation is off to a good start, but we're yet to see how that's going to sustain, whether market momentums will continue. So all of these are important factors that will need to fall into place for the growth of the ecosystem. Overall, I would say sectors come and go. I think there's always a certain thing of flavor of the season, but there are 3 or 4 things that will continue to stand out, which will help us in the ecosystem over the long run, right? So if you look at blockchain, you look at B2B enterprise tech, deep tech, all of that, there's abundance of talent coming up in India, right? Historically, that was the problem, that we never used to have high quality deep tech founders in India. That is all changing now. We're seeing a lot of folks who've been in the US markets, etc., leaving their jobs and coming up to start up in India, right? So we're seeing that kind of talent going up. So consequently, the number of opportunities that the sectors that we can go after, etc., will also continue to go up. At the same time, we will always have this India digitization story as a large theme, because with such a large country, there's a wide range of demographics, wide range of cultures, all that put together, you'll always have opportunities at the ground level, right? If something as nascent as, say, for example, fisheries, the silk supply chain, the CPG supply chain, all of these are traditional backbones of the country, so to speak, right? So if all of that can be digitized, and there's plenty of opportunity around that, those kind of things will continue to thrive going forward, right? So it's going to be no end in terms of that. And then on the other end, you'll have the consumer opportunities going up. Obviously, Geo has made things accessible. There's aspiration rising in tier 2, 3 cities. There is a lot of more curious individuals who turn into content consumers, so to speak, right? Obviously, there are content creators, but there are also content consumers. So you have different kinds of platforms where content is being consumed. So we'll see that side of things going up as well. And obviously healthcare, as we've all realized during the second wave, we're still far behind a lot of other developed nations in the world. So a lot of opportunities around that as well. So like I said, themes come and go. I think we'll continue to identify themes which are about 12 to 15 months ahead of time. That's partly what we've been doing at Axelor as well. But more importantly, I think the only way forward for the ecosystem is to go up now because of all these tailwinds that we're entering the industry and the current situation with.
Okay, great. Thanks, Nandan. I think we've covered everything we wanted to talk about today. I just want to thank you again for your time. We do appreciate you taking out the time to speak to us. It was a fantastic conversation. And yeah, thank you.